Hey, good morning, guys. This is Russell again for this new edition, new numero of this the minute of taxes. Okay, so I'm gonna be running this live from now on YouTube, as you may be watching right now, because my Facebook page has been disabled again for I don't know, maybe that is 20th time that they do it on my page, just after 2 or 3 editions of this new, very important video series or live series for taxpayer and business owner in general. So yeah, if you really want to keep focusing or following this video series, I will suggest that you click on the link to subscribe to my YouTube channel. So basically, what are we going to discuss today? We're going to discuss about the very important topic, which is the question is what's the difference between tax deduction and tax credit? Okay, so a lot of people sometimes are confused about tax deduction and tax credit, and which one do you prefer? So this is what we're going to share today in the next 5 minutes or more. Okay, so without further ado, are you ready? Let's go. Okay, so basically the tax deduction and tax credit are two different tax advantages that any taxpayer and businesses has to take. Okay, so the main difference is that the tax deduction is a deduction of your taxable income. If you are a taxpayer, you're not a business owner, it's how to get to your taxable income. It has an impact on how to get your taxable income. If you have 5,000 deduction, it means that you made $100,000. They're going to deduct 5,000 out of the $100,000 that you made. So your taxable income will be minus 5,000. Whereas if you have a 5,000 tax credit, your tax credit is going to be, after every calculation, it's a dollar for dollar tax reduction. Okay, it's a dollar for dollar tax benefit basically. Whereas the tax deduction has an impact on the taxable amount. Okay, so basically the tax deduction helps you to get a lower taxable income and sometimes a lower tax bracket. It can change you from one tax bracket to another one. Okay, because when your credit decrease, the more tax deduction you have, it can actually bring you down all the way to maybe a very lower tax credit, and that is where you can actually get more profit. And the tax credit on the other side is just for you to claim what is available. So the main benefit on this is that when you have to consider between the tax deduction and tax credit, there are so many things to consider, and you won't receive everything within that video. But I'm going to give you some examples so that you can know what to do. Okay, the tax credit, you have to consider that most of the time when you are on the lower tax bracket, on the lower tax bracket, when you don't make more income, because the tax credit, most of them actually phase out. And that's the reason why some people will say, what happened? I have these children, I have this child, I have done this. How is it that I don't have a credit? How much did my child give me as a credit? Depending on your level of income, your tax credit may have no effect. The effect might actually go down all the way to actually disappear. So that's the reason why you actually have to consider with your CPA and your tax professional when you're thinking about taking those credits. You may want to switch it. You may want to send if it's a family member, you may want to put the credit or the person you want to take the credit from on the person that has a lower tax bracket, so that it can actually be eligible to take all the credit. So what we're going to do here, I was just trying to explain to you what is the difference between the tax credit and the tax deduction. But what you need to know is that most of the time the tax deduction is actually much better, because imagine that you have when it comes to, for example, educational credit. Educational credit, if you have to take the lifetime credit, I think it's 1,000 maximum, 1,000 or 1,500, the max you can take. It doesn't matter if you spend $20,000, $40,000. But imagine that you can take the $40,000 off your gross income. Imagine what you can get, right? Not only you save taxes on what you're supposed to pay on $40,000, but you also get to the lower tax bracket. That means even the taxable amount is now taxed at the lowest amount, at the lower tax rate. That's why you always have to consider when you say, I'm going to school, yeah, at the end I'm going to take my 1099 aid because I'm going to get tax credit. It doesn't matter. You don't know what your tax level of income is going to. Maybe you know, but you don't know that it's going to have little to no effect on it. Or you have a children, you say, okay, two of my children are going to give me this amount of money. You don't know, because you might have no effect of your children on your taxes. Or it doesn't matter. There are so many tax credits. And during this daily tax minute of taxes, where I'm sharing with you tax tip and tax strategy, I'm going to be going through almost at least 50 different tax credit and deduction that you as a business owner or taxpayer in general can take during the tax season. Okay, so tomorrow I will be sharing one of the most important tax credit right now. Okay, tomorrow I'm going to be sharing that with you guys. Again, this live is going to be more on YouTube. That means if you want to keep up on it, you may want to consider to subscribe to my YouTube channel, because I'm like you're watching here from YouTube. You're gonna be watching it from YouTube. If you want it to pop up anytime I go live, then you may want to subscribe to my YouTube channel. This is Russell Fowlers, your tax and accounting specialist. So see you tomorrow for the next minute of the taxes. Ciao.